CNBC reports that women are literally losing sleep over this retirement fear. This retirement fear. What could it possibly be? Well, let me click on the link and find out. All right, so welcome to the Heritage Wealth Planning YouTube channel, the place where you come to maybe put some perspective in your own retirement plans. And that's what we're going to talk about here today using this article from CNBC and a link they also have for that as well. We'll talk about that, and then we'll dispute some of their findings. All right, so welcome. If you like what you see here, don't forget to subscribe down below. As always, comments, thumbs up, you name it, help me out a lot. So don't forget to do that as too if you're so kind. All right, so here's from CNBC. Let me turn this guy off. This is from just the other day. Yeah, September 29th, 2018. Women are losing sleep over this retirement fear, says Darla Mercado. 7 out of 10 women are very concerned about having enough money to cover their long-term care expenses, according to Nationwide. How ironic. And we'll talk about why here in just a second. More than 60% of high-income adults over 50 have no idea what their long-term care costs will be. And I imagine it's even more than that if you're not a high-income adult, but whatever. Too often, families fail to discuss the financial impact of providing care. So my first thing that jumps out at me is more than 60% of high-income adults over age 50 have no idea what their long-term care costs could be. I don't understand why they just focus on high-income adults. Is it odd to you? Huh? What? And we'll dive into why that matters here in just a second too. But why not middle income or low income? Are we not? Do they not have any idea what their long-term care costs will be? I'm a cynic, man. I'm telling you, there's always a reason behind this. And if you ever use the term follow the money, you usually can find your answer pretty simply. All right, so let's read it, dive into this a little bit. When it comes to retirement savings, living too long can be a blessing or a curse. For women who tend to outlive men and spend years caring for family members, it's a major cause of anxiety. Those were the recent survey by Nationwide Retirement Institute. Nationwide is an insurance company. Is there any let's just put it this way. What does insurance companies do? They sell insurance products. Could we be going down the road of insurance products? Yeah, well, keep with me. For women, in February, the Institute performed an online poll of 1,000 adults over age 50 with household income of at least $150,000 and 522 adults over the age of 50 who have been caregivers. All right, so a couple of things. Online polls in of itself, the statistical viability of that is sketchy at best. We don't know who these people are. We don't know how they got. We don't know. That's not disputing the online poll potential, but be careful when you just look at an online poll for sure, because we don't know who these people are. And we don't know what the statistical breakdown is. We just don't know. Then they do 522 adults over the age of 50 who are or have been care providers. Now, 522 is a large enough sample size to make it statistically important for sure. I was reading a poll about congressional districts the other day, and their average was like 28. They polled 28 people per average congressional district. This is like the Washington Post. I mean, it's not some fly-by-night organization. So that's statistically irrelevant. You can't get a gauge on anything with 28 people. You just can't. And so that's silly. But they published it, and all the media ran with it. It's actually embarrassingly silly. All right, so of the participants, and again, 1,000 people, 71% of women said they were worried about having enough health care or enough money to pay for healthcare expense. I get that. The worry is especially keen among caregivers. Again, there's 522 who have been or are caregivers, where 3 of 4 said they were concerned about keeping up costs with long-term care. Well, I'm concerned with it too. I'm surprised actually 1 of 4 were not concerned. That should be the cause of study. Why are you not concerned? Because healthcare costs is a concern. It is. And if you don't have a concern, I want some of that juice, because I don't want to be concerned with it either, because it ain't cheap. All right, women feel the strain of long-term care keenly, as they tend to be the ones looking out for their elderly and infirm parents and spouses. Sons want to care for mom and dad and be supportive, but they feel comfortable identifying an expert to navigate that. Yep. Daughters feel it's their responsibility to provide care, even if they don't understand the complexity of the landscape. I 100% agree with that. Here's what women need to know about planning for long-term care. It's no secret that paying for long-term care is a costly endeavor. In 2017, the annual national median cost of bringing in a home health aide was roughly $50,000, according to Genworth. A year's worth of care in a semi-private room in a nursing home is even more, $85,775, says Genworth. All right. Why do I sigh there? Because these are all clickbait, scary numbers. That doesn't mean it's not true. They're not mutually exclusive. Being scary and not being realistic do not mean they can't coexist. But let's look at the data. So I had to bring up the cost of care study from Genworth. And here we go. This is a study that we're talking about from the CNBC article. The Genworth Cost of Care Survey has been the foundation for long-term care planning since 2004, blah, blah, blah. The 2017 survey conducted by Care Scout, one of the most comprehensive of its kind, covers 440 regions across the U.S. and is based on 15,000 completed surveys. So this is good. I mean, this is, in my opinion, a legitimate survey. Again, I'm trusting the data, which always kind of scared me, the skeptic I am. But here they go. Home health care, monthly service, 2017 costs about $4,000 a month. And home health aid, same thing. So you're going to spend roughly $48,000 a year for home health care cost. All right. So it's to have someone come into your home and provide you some level of service. Generally, it's about 8 hours a day. I'm not going to dive into the specifics of what they're considering home health care. Generally speaking, it's about 8 hours a day. And what that typically means is transferring your ability to pivot. I mean, we might not, but I know people who've got someone coming in who comes in and helps you. You know, they cook for you. They get you up so you can go to the bathroom if that's where you need help with that. I mean, they'll just be there for you to do things that you otherwise would be able to do but can't anymore. The drawback is it's not full time. It's just 8 hours a day. If it's full time, it's going to be more than that for sure. Adult daycare is $1,500 a month. Assisted living facility is about $4,000 a month, which actually seems a little bit cheaper than I would have thought. Now, assisted living facility is 24/7. You're actually going to a home with some cohorts similar to you. So you have 2 or 3 aides, nurses, RNs, nurse practitioners, probably not, but CNA, certified nursing associates or assistants or something like that. You have 2 or 3 people there on a regular basis, and each person taking up a bed is paying about $4,000 a month. And a lot of these assisted living facilities they run the gamut from just high speed, high class to, essentially one step up above Medicaid, if not actually even Medicaid. And that doesn't mean it's bad. It just means you're not going to get the frills of the high service, high care costs, ideally, or not ideally, also known as high cost, high expense. Nursing room care is basically $7,000 to $8,000 a month. All right. So that's the cost, the national median. All right. Now, what does that tell you? Well, it doesn't tell you anything because that's just a median. If you were to go to one of these places, if you were to go and need this help, that is the median cost. And this is what this doesn't say. It says it's no secret paying for long-term care is a costly endeavor. It is. No, I'm not debating that. The question is it a costly endeavor for everybody? And the answer is absolutely 100% no, it's not. If you need these services, it is not cheap. The vast majority of us do not need the services. That does not mean don't plan for it, but to stay awake at night because of stuff like this, these studies that Genworth does is, and I must say misleading, because you might need the service and you'd wish you had coverage for it, but the vast majority of us don't. And so this assumes, it makes the implication that you are going to need these services. How are you going to come up with $50,000 a year to pay for it? But you don't. The vast majority of us don't. So let's just look. So, and then a year's worth of care, we talked about that. In a nursing home is about, we'll just say $100,000. So let's see here. Why do I kind of chuckle at the insurance company? So we talked about the national cost of care, comparing long-term care. Let's just scroll down a little bit, shall we? And see what else GE or Genworth offers. Oh, if you're ready to talk about your long-term care options, contact us now. And you get a nice lady right there with her headphones on. Request a free consultation. What could they possibly, they just want to talk to us because they're nice and Genworth is going to pay that nice lady to talk to you for free? No, they're going to have care funding solutions, i.e. long-term care insurance, life insurance, all these different solutions they have, immediate need annuities, group long-term care, long-term care. They're going to have all that. Is that bad? No, but is there an incentive for Genworth to get you nervous about your potential cost of care and produce these numbers? Yes, there is. It's like an investment advisor who says, you are going to make the big mistake, sir. If you don't let me manage your money for a 1% fee, you're going to do stupid things. You're like, man, you're right. I could do stupid things. In fact, I'm the investment advisor now. Let me show you this chart from Dalbar that says the average investor underperforms the average investor's investment by a factor of 3. So the average investment returns 10. The average investor returns 3. Thus, that would be you if you don't hire me and my 1%. Huh? Well, here's a chart that shows it. How many people actually dive into the details of various charts? None. Anyway, so there's Genworth. All right. Again, is this right? Yes, it's 100% correct. Is there an incentive for them to scare you to buy a product? Absolutely, without question. Is it a legit incentive for you to buy a product? Maybe. I mean, legit, what I'm saying is, should they scare you to buy a product? Maybe. I mean, if that's what's keeping you awake at night and you can buy a long-term care insurance product to cover the needs, yes, it is. Just on a side note, I listened to this Susie Orman. I'll probably do a separate. Susie Orman, some lady, Paula Pant, something like that. She interviewed Susie about the FIRE movement. Now, look, I'm new to the FIRE. There's some people on YouTube that tell me about it. And generally, I'm a fellow traveler in that regard. Not generally. I mean, I'm absolutely. I didn't know there was actually a term for this, but I 100% agree. Was it financial independence, retire early? I'm all about that. But I was sitting there listening to Susie Orman. It was the most mind-bogglingly insane thing I've ever heard, that you could have a flood that takes out your house, so you need to still work in some crappy old job. It's just a weird. I mean, I was sitting there saying, how it was mind-boggling. It was the weirdest thing I've ever heard. She said, "Why cost my mom?" I think she said $250,000 a year for health or for in-home health. No, I think it was a nursing home. It cost my mom $250,000 a year or something like that. It's going to cost you the same. You living on $80,000. It was the weirdest diatribe I've ever heard in my life, and which is saying a lot because I follow politics. I hear a lot of insane diatribes. This was just the strangest thing I've ever heard. Now, Susie would say, "Josh, I didn't say people need to work in some crappy old job. I said they should work in the job they love." Okay, well, how do you get a job you love if you're working some crappy old job? You got to quit. You got to quit to find the job you love, which is what I'm doing now. It was weird. And again, the whole point about it is these people are preying on the idea that we're all going to be destitute because healthcare. And it's simply just not factually evident. And I'll show you here in just a second. All right. So there you go. That's the, I guess that's, oh wait, is that the long term? I want to go back to the article. All right. All right. So we talked about that. And here's your average assisted living costs across the nation. You can look at that if you want. Recruiting family members to help out with those needs adds a different kind of cost. Yep. 7 out of 10 participants in a nationwide study said they would like the option of relying on a family member if they needed long-term care. And I guarantee 7 out of 10 also like the option of staying in their home. Reverse mortgages, could they play a role? Yeah, they could. Without the appropriate planning in place, things can become overwhelming and may potentially endanger the caregiver's career. I have a good friend of mine who's going through that right now. Absolutely. Taking care of her mom without question. And her mom has enough assets to get her by, but it's not a pleasant thing. It's not. I'm not making light of if this happens to you, you could be in a world of hurt. I'm not. But the actuality of that happening to you is completely separate from the risks that occur. I'm not making light of people losing their houses in a flood. I'm not. That is absolutely a correct insinuation that something could happen. Susie Orman makes that right. It's right. That could happen. Will it likely happen? No, it's not. So what do you do for these unlikely events, but they could happen? And that's where we call the fat tail risk. There's a risk of, you're planning in this, basically a linear, not linear, but a bell curve, a smoothly sloped bell curve. You're planning fall in that makes sense, except for these fat tail risks on the outlier there. And if those fat tail risks happen, you're in a world of hurt. That's why you buy insurance. You buy insurance for the likelihood, the unlikelihood that your house burns down, that you get killed, that you develop a sickness, a huge illness that could put you out, all that stuff. Another thing too that annoyed me, I don't know if it's Susie, but one of those two people were saying long-term disability, they're making it synonymous with long-term care insurance. And two things are completely different. I did a video on the difference between long-term disability and long-term care insurance. The two things are not anywhere near the same, actually. It was in that interview that Paula Pant did with Susie. And I think it might have been Paula, or maybe it was Susie. I can't remember. After about 30 minutes, I couldn't listen anymore. It was insane. I just couldn't take it anymore. But one of those two said, we're making the two things seem the same. They're not. Long-term care insurance is for caring while you can't care for yourself. Long-term disability is for paying your money that you lost, basically about 65% clip from your employment that you no longer can work for. So long-term care insurance isn't for that. Long-term care insurance is for paying for care. Long-term disability is for paying for your lost salary. So just keep that in mind. Completely different things. Indeed, on average, caregivers in nationwide studies said they spend 56 hours a week caring for loved ones. I wonder if we could see on this. I didn't look. I wish I would have. do they give us a link to the nationwide study? Because I would like to see who they actually interviewed, because this, all right, on average, caregivers in nationwide study said they spend 56 a week caring for loved ones, which would mean you don't have 56 hours a week to work. The question is, what kind of skew is that? Are they, I don't know. Are they interviewing solely people who are providing care? And again, let's just say of the population, 2% provide care, and of those 2%, they're going to survey 100 people. And the average of those surveyed were 56 hours. Now, again, averages is different than median, right? And it's interesting how Genworth talks about the median price here, where they talk about, median right there. See, the median cost and average right here. So especially when you have a small sample size. So they're surveying, 100 people. I'm just saying it's a pretty small sample size, of which of those people are caregivers. Let's just use that for an example. If you have a couple that are providing 200 hours, not 200 hours a week, 100 hours a week, all right, and you got a couple people providing 10 hours a week, it's going to skew the averages to look 55 hours a week right there, even though only 2 are providing 2 hours. But again, the skew is for the top because it's such a small sample size. I hope that makes sense. And that's the thing with averages. Averages don't tell you the whole story. The interesting thing is the medians, half above, half below. So you always want to keep that in mind. Despite the fact that survey participants had a clear idea of how they want to be cared for, a few people were talking about with their family members. Only 10% spoke with their kids about it. People want a family member to provide for them. Exactly. They aren't sure the steps to have the conversation. So I'm sure you can call nationwide and they'll tell you. But they do. They want a family member to provide for them, and they want to stay in home. Okay. And that's why the whole thing with Dave Ramsey, not looking at reverse mortgages as an option is silly, as no one wants to go to nursing home. No one wants to go to an assisted living facility. They don't. Talk to your spouse and kids. Yep. Bring your financial advisor. Yeah. Okay. Talk to your financial advisor. Yeah. Absolutely. I always kind of challenge, the financial advisors, their ability to understand what is really going on. There are some wonderful ones, but a lot are not. Hammer out your legal documents. Yep. A healthcare proxy, a medical power of attorney, critical, and a durable power of attorney. They talk about a power of attorney for your finances. We call that a durable power of attorney. Absolutely. You want to make sure that's updated and can be acted on rather quickly. You don't want to put a whole bunch of roadblocks in there so that the person who you want to handle your finances has to jump through hoops. You want to be able to act on that fast. And don't forget the small details. All right. So I just want to revisit the EBRI study, Employee Benefits Research Institute, because this is at the end of the day, and I brought this up in a previous video. All the worries about long-term care and cost, and what the EBRI says is pretty explicit. For the majority of surveyed people, now they surveyed a heck of a lot of people here, out-of-pocket healthcare expenses are not as high as commonly believed. For those who die at age 95 or later, the median cumulative out-of-pocket expense after 70 until death is slightly above $27,000. So for those who die at 95 or later, that's a very small sample size, the median cumulative out-of-pocket expenses, this does not include your Medicare Part B, Part D, Medigap, or Medicare Advantage premiums, and it doesn't include your copays, but it includes everything else. So if you want to factor in $200 a month in Medicare premiums, that's, you add $2,400 a year to what's that, 25 years, you can figure that out. It's another $50,000, but you're already paying those fees anyway. So that's not an add-on. That's just, this right here is an add-on to what you're already paying. So remember, a small sample size of those who die after 95, their cumulative, the add-on every single year, out-of-pocket expenses from age 70 until his death after 95 is slightly above $27,000. The median, half pay more, half pay less. There you go. And that's if you die 95 or later. For all surveyed people, the median out-of-pocket nursing home expense, that's nursing home, all right? So this is not all, but this is nursing home right here. And so, but just going back, because Genworth had that big thing, $85,000 an average nursing home cost. Oh my goodness, is zero. Because the vast majority of people don't go to nursing homes. All right, so nursing home, and that's what we taught. Nursing home expenses are one of the biggest contributors driving the skewness of the distribution. So take out nursing home costs because this includes everything. The median cost of nursing homes for all surveyed people is zero. The median cost if you die after 95 is $27,000. But the nursing home by far and away is the biggest contributor to that cost as it is, and most people don't use it. All right, my friends. So the whole point is going back to the CNBC study. Stop losing sleep over this stuff. Buy long-term care insurance, for heaven's sake. I absolutely think you should. I have it. 48 years old. We bought it when we were 50. I was 40. My wife's at 36. Because it is an expense. It is a risk. It's a catastrophic risk, which I can't afford to cover on my own. So to cover catastrophic risks, you buy insurance because it's cheap, especially when you're young and not likely to need it. That's the thing with insurance. You buy health insurance when you're in good shape. You buy life insurance when you're in good shape. You buy disability insurance when you're not disabled, because the likelihood of you needing to file a claim is small, and they can at least collect premiums for all those added years before you file claims. So get a long-term care policy. Absolutely. If you're that worried about the fat tail risks of needing nursing home coverage or needing in-home health care or needing assisted living, long-term care is not a bad program. Maybe I'll look at my, I keep saying I can do this. I'll show you the policy I have, and you can decide if that's for you. Anyway, as always, if you like what you see here, my friends, don't forget to subscribe, thumbs up, comments. I'd love to hear your thoughts. Again, there are outliers to every single scenario. I get that. Someone died of lightning strikes. I get that. And I don't make light of that. It sucks. No other way around that. But for you to sit there and worry and panic about being hit by lightning is not rational. And I'm going to make the same argument here. This isn't as rational. Obviously, a little bit more so than lightning, but still, at the end of the day, the likelihood of this happening to you in terms of huge nursing home costs, huge assisted living costs, huge in-home healthcare costs is minimal. It just isn't. So, and there is a solution for all these things called long-term care insurance, which I think you should get. So, as we'll see you guys next time, and don't forget to go to the blog at heritagewealthplanning.com. Thanks, guys.